Good evening, listeners and viewers. Welcome to the FAT Talks by the Fidelis Leadership Institute that come to you every Thursday on X Spaces, on the Fidelis Institute space, and on Smart TV, Smart 24, live on Smart 24. As usual, we are here to have conversations that matter on issues that are very pertinent to us as an institute, but to us as a community, creating a critical mass of leaders that are faithful, available, and teachable. With me in the studio is a gentleman that probably needs the introduction based on the topic that we are going to discuss today, which is financing options for small and medium enterprises as well as startups. Mr. John Walugembe is the ED, the Executive Director of the Federation of Small and Medium Enterprises. Welcome to the show.
Thank you for having me here, and it's a pleasure to join the FAT Talks.
Are you fat?
Probably not, but...
Are you faithful in your leadership? Are you available?
Oh, so, okay, yes, so fat means not the usual fat,
no,
but...
No.
Okay. Please repeat it.
Are you faithful?
Okay.
Are you available? And are you teachable as you execute your leadership?
That's tough. I don't think that it's very easy to judge yourself as unfaithful. Because you can try, but, sometimes the people think that they're most faithful, in fact, may not end up being that way. And then sometimes those people that don't intend, but kind of work hard behind the scenes end up being the fattest.
That's the fattest.
Yes. So
I like the modesty.
So I think it's very important. If you look at the issue around being teachable, not many of us want to remain open to new ideas. I think as people work and accumulate a certain level of experience in their field of expertise, they just want to talk perpetually. They're not teachable enough to listen, to think that there are new things that they can learn from others. So in that sense, it's kind of tough. It's always work in progress. I think all of us should be work in progress in that regard.
You are a leader indeed because you are modest and humble. That means if you cannot be the one to toot your own horn, the jury is still out, but I see signs of a teachable, available, and faithful leader. The obvious answer I would say yes, I am, but the fact that you have to give room to people to decide, we hope that the Federation can confirm that you're fat in that sense.
Correct.
So, viewers and listeners, we are going to discuss financing options for startups and small and medium enterprises. I know it's the end of the year, and most probably we are getting excited. It's been a hard and long year, and we are going to spend our money, eat our money, and have fun. But it doesn't hurt to plan now for when the festive season is over, because we know this is the time we get bonuses, we get dividends. Yes, to plan for the kamane that we'll eat in the other rest of the year, because December will come, January is certain to come, and life must go on. Especially that we know that we've been living in very volatile times post-COVID. So Mr. Walugembe will help us to plan, and if nothing else, leave us with options. If we decide to be the smart ones that gather hay while it still shines, then after the parting, we'll be investment ready come next year. And John, to start up this conversation, we'll pick it from that very conversation of post-COVID.
Yes.
From your experience, do we still have COVID to blame? Because everything post-COVID was a COVID problem. From the business standpoint, is COVID still a pertinent issue?
No, because, people must appreciate that there's the medical side. And the medical side, COVID has really been handled. People got vaccines, people can now move, they no longer have people on face. So COVID, the disease, is really not a problem. But the economic impacts of COVID-19 are still here. If you look at some of the disruptions that COVID-19 had on the economy, they are still lingering. I don't think our economy, for starters, has gone back to the COVID kind of levels. Now, we can't say that COVID on its own is to blame for all our problems, but it's still a factor. And many businesses have not fully recovered from the impact of the lockdowns and so on. And in fact, some sectors, if you look at the tourism sector, it hasn't fully recovered at all. So I would say that COVID is to blame partially, but there are other issues also.
There are other issues. For example, would you like to give us a 1, 2, 3 of other non-COVID related issues?
Well, for Uganda, for instance, you're seeing now a lot of countries withhold aid. You know that the US issued a business advisory for Uganda. You know that we've had incidents that regarding tourists. The UK and the EU have also issued travel advisories. You've had the World Bank withhold funding. So these are new realities that are going to negatively impact the economy. That's not to say that it's entirely negative, really. But these are things we must consider. If you're running a business, if you're out there, you can't just say, well, the World Bank can keep this money. Well, it's a World Bank money that trickles down. So maybe the decision the World Bank takes now might start to pinch 2 to 3 years from now.
2 3 years from now?
Yes, definitely. Because the World Bank did not withhold money immediately. They simply said they're not going to present new projects to their executive board for approval. So that means that the impact is not an immediate decision, but the impact will start to bite a couple of years from now. So these are things that business people should be mindful of as we navigate that time. It's not as tough as it was in the midst of COVID, and I think that's something we need to say. As a business leader, I see that there's some bit of respite across all sectors, but we are not in a comfortable position yet.
Thank you. And I hear you say that we are not where we were, but we are definitely far from where we want to be or
Correct.
should be.
Yes.
If there's anything like economic recovery post-COVID.
Yes.
Yes, thank you very much, John. There's been a talk post-COVID, and the word on every company, every boardroom, every CEO is VUCA. Volatility, complexity, uncertainty, ambiguity.
Yeah.
And you seem to confirm that we are still in the VUCA era.
Yeah.
It's the degree that matters. Varies in the present times.
Correct.
Now that we are discussing financing options,
Yes.
where would we start if we wanted to proactively mitigate the foreseeable economic disruptions with the new dynamics like the withdrawal funding and others that we will discuss in this? Where can a proactive person start, especially the startups and the small and medium, because the financing options depend on where you are as a business. A startup will have different challenges compared to a Fortune 500 company.
Okay. So before I prescribe medicine, I must interrogate what the problem is. How sick is the patient?
Okay.
Where are they? I would say that the issue of financing has always been an issue. One of the key constraints that businesses say that they face, and that's a very important statement. Most businesses say that access to finance is one of their biggest challenges.
Taxes? Access or taxes?
Access.
Access to finance.
Access to affordable finance.
The operative word being affordable.
Access and affordable.
Both.
Yes.
Okay.
You can have access, but it's expensive.
Very
finance.
expensive financing.
So, those are the two things that have always been highlighted by MSMEs. Now, why is that the case? And I'll start by explaining why that is the case. One is on the demand and the supply side. Demand means you, the person who wants to borrow, how ready are you to borrow? Because a lot of SMEs are not ready. They don't keep repos, they don't have books of accounts, they don't have collateral, especially for women entrepreneurs. A lot of them lack collateral. So as such, they end up being unbanked. So there are a lot of demand side issues that need to be solved. A lot of SMEs are not trained. When I borrow money, what will I use it for? Some of them misdirect money after borrowing to do their business. They build a house, or they marry a new wife, or they, so you get money for one reason, use it for another. Now, then there's also the supply side. Now, a lot of our financial institutions consider SMEs to be risky. Why? They don't understand the business models of SMEs. The models that they use as financial institutions in most cases disadvantage SMEs. And I'll say that most banks, after the financial crisis in 2008, the new regulations were very anti-SME lending.
Really?
Very true, because the emphasis was laid on risk mitigation.
Risk mitigation.
Not just in the US and developed markets, but also in developing markets, because they thought probably the next crisis might come from the developing world. So they rolled out these very stringent regulations that bankers have to follow. So many banks choose not to lend to SMEs because they want to stay compliant with the rules. And that's something that people won't tell in the open, but that's what it is. A lot of financial institutions find it difficult to lend to SMEs because of the rules that they have to follow. Some of those include collateral and others that I've already mentioned. So that's the position that SMEs are facing before COVID-19. Now, how did COVID-19 make the situation worse? So during COVID, a lot of businesses closed, and as such, they could not pay or fulfill their loan obligations. There is evidence that a lot of non-performing loans have been taken out by SMEs from financial institutions.
Say that again, please.
There is a lot of evidence that a lot of non-performing loans in the financial institutions at the moment were taken out by SMEs.
Okay. And they failed to pay.
They failed to pay. That's the reality.
What are the remedies in such a situation?
When they failed to pay, the government tried to come up with measures, including putting some money in Uganda Development Bank, including setting up the Small Business Recovery Fund. Those I'll talk about later. But it also, the central bank also instructed financial institutions to restructure loans. In the sense that I'm not working, but I have a loan that runs for 5 years, but during the lockdown I didn't work. So what government said was that you go to your financial institution, agree to give you more time to repay. Initially they were
renegotiate. They may not have given you money, but they give you
more time and
more flexible
on the same terms. Now that was the intention of government. Now what happened? The financial institution said, fine, we are giving you more time. The principal, you will pay the same principal that you took, but you have to pay more interest because now the period has increased.
The period, of course.
So what the SMEs found is that actually this restructuring ended up increasing the obligation,
compounding the problem instead.
So those things. Then you had an issue of SMEs not working, but landlords insisting that they pay for that time when they were under lockdown. So that's why you see a lot of businesses have now left.
Because when the landlords probably had loans, so it becomes a
exactly. So it's a vicious cycle.
An egg-hen
because the landlords are saying now we also have
loans.
Now what happened in other countries that government would come and clear the landlords on behalf of the SMEs. Government would come and say we are paying maybe 30 or 40%. So but in this case it was government instructed that there's a bilateral kind of agreement. Now, that is the situation that SMEs have been grappling with.
That is the diagnosis. As far as doctor, as you said, you want to be a doctor first to understand the problem. So that's the problem.
So that's the problem. And recently, a study was done by the financial sector dependent, and what they found is that many SMEs need short-term credit. But the financial institutions are willing to offer medium-term loans. So, for instance, I want money for 6 months to do something and repay you. But you want to give me a 5-year loan. For what? I don't need it.
The longer the loan
period. The longer the loan. It makes sense for you as a financial institution because when you calculate the interest you have to pay after 5 years.
It's much
6 months doesn't work for you because it's as soon as it's in, it's out. So that kind of disparity between what the banks are willing to offer and what the SMEs want has also been part of.
So if I hear you, there have been post-COVID issues that have been aggravated by the economic legal and regulatory framework, the changes that have come from funders and banking that make it hard for
those are not post-COVID. Some of them are pre-COVID. As I said, the stringency of the regulatory environment for banks, especially regulated financial institutions, was after. It was global in nature, and it was driven by the financial crisis of 2008.
That is pre-COVID.
That's pre-COVID.
Okay.
After COVID, there have been a lot of interventions to try and support SMEs to recover, especially by increasing their access to finance. And I'll talk about the different measures that government introduced and how I could gauge their performance.
Okay.
Yes.
Thank you very much, John. And those who are tuning in, we are the Fidelis Leadership Institute. These are FAT Talks that are part of our program that runs very many different aspects, including leadership training, entrepreneurship training, and the reason we have Mr. Walugembe in the studio today is to help us talk about financing options for startups. FLI is an institute that is primarily focused on creating a critical mass of leaders that are ethical, that are faithful, that are available and teachable. Even the business sector players are most welcome to Fidelis so that we can help train and give you insight on how to run businesses that are ethical, that are profitable, that are adding value to you as a business visionary, but also to the teams that you lead. We do have an upcoming cohort for the next FAT Fellowship starting in February. Please look at the details on our social handles and on our space and on our website. That is X Spaces Fidelis Leadership for more details. We hope that we can help you and partner with you and support your teams to work through the nuances of the VUCA era that we are discussing and have diagnosed so far with John, to see how we can best ensure economic stability for us and our organizations in the coming foreseeable future. John has mentioned some issues to do with VUCA that are post-COVID, but has not been shy from confirming that on top of those post-COVID things that we have been hanging on as the reasons for why things are tight, there's demand-side issues that come from the players themselves in the SME.
Correct.
You said you talk about those.
Yes.
You've talked about interventions that government, you've mentioned that we are going to talk about some interventions that government will handle, but the biggest problem, generally pre-COVID, post-COVID, is access
and affordability.
and affordability of financing.
Correct.
So, John, going straight into the discussion for the day.
Yes.
What are the options that an SME or a startup has? We don't even need to go and skirt around the circle.
Okay, so I'll start by saying that a lot of startups and small businesses think that there is Father Christmas out there who is going to invest in their business idea, who will believe in the fact that they have a very smart business idea and that this person will dip their hands in their pocket and give them these resources. They'll spend the resources as they wish, and then they'll go back and so. So this kind of idea, in my view, is wrong. Experience has shown that between 70 to 80% of startups and SMEs bootstrap. Bootstrap means they use their own resources or resources gotten from family and friends. So if you're a startup out there, chances are no bank is going to lend you money. Because every day, 100 people walk in with brilliant ideas. Banks don't lend ideas. Bank lend proven business.
Stop right there. That's a tweetable quote. Banks don't lend ideas.
They don't lend ideas.
Anybody listening, brilliant in the era of influencers and creatives,
Yes.
You better have a solid background, because that's where we are. I'm sorry to interrupt, but
Yeah.
everybody is dreaming big, but we're not doing the background work to make our projects bankable. So, Fidelis leaders and those out there, banks don't lend ideas. Please go on.
And in finance, we say you must have skin in the game. Means if you believe in the idea so much, or if you believe it works, you must take the risks, because entrepreneurs are risk takers. But now you have risk. What you have now are grantpreneurs, people who are just scheming for grants left, right, and center. They have no skin in the game. They've not said, oh, I had one cow and I've sold it and I've invested it in this business. Instead, they have all these ideas and they're simply looking for people to put in their money. So, in other words, you want to bring the idea and you want others to take the risk. You're not an entrepreneur, because an entrepreneur by definition means you take risks. Okay? Using all kinds of resources, financial and so on, human, stuff like that. So, young people there and other small business owners, don't waste time moving left, right, and center, going to banks, going to this place and that bank. Because this money in the banks is for some people, and the banks have a duty to protect it. They should only lend it when they are very sure that you have the ability to repay. Okay? Now, and they have seen so many people come with brilliant ideas and fail to pay. So that's why at the end of the day, they focus on what they call cash flow. Show us how you're earning, show us how money is coming in. Then after we've seen how money is coming in, how much will be used to repay our loan, how much will be used to keep you as a person, how much will be used to keep the business running, because you have employees, you have overheads and so on. This is the calculation. If I'm a banker, this is my focus, not the idea. Okay.
So there has to be a mindset change.
There completely has to be a mindset change. Now, in other economies, you have what they call venture capital. These are people who take risks. These are rich people who say, okay, you have a good idea, you have no solid background, you have no nothing, but I'll bet on you. I'll put money in your business. Okay? You have, but here in Uganda, we don't have that kind of mindset. Yes. The rich have a poverty mindset themselves, because sometimes they even think they are poorer than the poor.
Why do you say that, John?
Yeah.
What brings you to that conclusion?
No, because when you make money, you are supposed to reach a certain level and say, this is enough for me, let me help others. Unfortunately, here, it's very hard to find someone who has reached that level of saying, I've reached enough, let me now start giving. If you look at the US, the top most billionaires have signed a commitment to give out all their wealth in their lifetime. If you want a Ugandan billionaire or millionaire to hate you, ask them to sign even a quarter of their wealth away. So we are in a market where no rich person is going to bet on your idea. That's my observation.
That's your
You may agree, you may not, but that's my observation. So being that we have a market that does not have a vibrant venture capital market, venture capital market, means you have to bootstrap, or you have to rely on your friends, on your relatives to raise money. All the research that has been conducted proves this fact. Now, okay, so
is that not where government comes in? Because if the private sector in Uganda or in the region by way of mentality is not very keen on venture capitalism, is that not where government comes in?
Yes, government comes in, but remember, government is also using taxpayers' money. So, first of all, remember I talked about that demand side constraints, that the entrepreneurs themselves are unready. So that's what I want to address before we point fingers at the banks, which I'm going to do very shortly.
You can't wait.
And the other financial institutions. I must tell SMEs, get yourself ready. Okay? If you are starting a business, you start. Don't keep telling stories everywhere, telling me, I'm going to start this business, I'm going to start business. You're not starting.
Start right.
Make mistakes, put in your money, lose it, learn lessons, but start. Now the challenge with a lot of our startup entrepreneurs, they're just hawking ideas. So no one, including government, will risk in that direction. So let's prepare ourselves. For small businesses, if you started, make sure you do things right. Keep your records. You keep a record, have a bank account, because a bank statement can show your income, at least.
At the very least.
At the very least. So have a bank account, have a TIN number, pay some taxes. Pay some taxes. This is what they call presumptive tax. you can, and in Uganda it's self-declaration. No, people say you are but it's you to declare how much you've earned. Go to your say I've earned 200,000, pay your tax. You think the Commissioner General will have time to come after you?
See.
The Commissioner General only focuses on those that are running. But for if you have come, you've declared, you've paid your portion.
That's a good one. That's a good trick. If you proactively go,
yes,
and give them what you think you earned and be compliant, then
yes, they'll see this person. He's paying very little, but he's trying. See?
E for effort. They see that the intention.
So a lot of starting right is also very important, because you want to operate in the shadows, but you want to benefit from the economy of the light.
For example, bidding. You will not bid without a tax certificate. Even
You have registered no name. You are operating, you have no bank account, you have no nothing, but you're complaining that banks are not lending to us. Which bank is going to lend to you if you're not?
Why do you think people are not compliant? Because if everybody has a good idea, the best they want is for it to flourish.
They fear that, misinformation, to be honest.
Okay.
They fear that URA will come and charge them more money than they ought to pay, which is completely untrue. Okay, so people must appreciate that you must establish some kind of minimal positive working relationship with the authorities, even the tax authorities, because you can't grow your business if you're not working harmoniously with them. Obviously, it's not the case that they'll do things that you like, but you can't wish them away. So that's the demand side. And that's where the Fidelity Institute comes in to build capacity. Because Ugandans think they're out there. No. Who goes to school? Me, I'm a business person. Who knows my business
model? They call it speaking
Be
English.
teachable.
Too much English.
That English is important. Where we are going, you cannot do the business of the future with the knowledge of the past.
That is another. You cannot do the business of the future using the knowledge of the past.
Exactly. So you must be teachable. And unfortunately, a lot of business people are not teachable. They think they know. Someone runs a shop with 2 kilograms of sugar, 1 loaf of bread, thinks he's an expert.
He's an entrepreneur, he's a business owner.
No, he thinks he's an expert. When he sees you, he says, no, you speak a lot of English. Yes. Because for him, he thinks that just by buying bread and hawking it on the village, that has made him an authority in business. So, on the demand side, we need to do some kind of work. We need to look out for people who can add value. And I think that Fidelity is one of those partners that can add value to your business.
Definitely. And I agree with you on the teachability and the gap between the knowledge gap between the business people and the implementers of the financing options. But the question to us would be, where does government come in? I insist.
I'm coming on the government side. Now, so that's the demand side. Now let's look at the supply side. The supply side, you have governmental options, because government has a duty to support its businesses to grow and recover. So government has started a number of programs to support businesses, not just post-COVID, but even before. But unfortunately, there's limited knowledge about these options. One, there's something called the Agricultural Credit Facility. The Agricultural Credit Facility is meant to ensure that all businesses that are involved in agricultural value addition, in the chain generally, that cannot access money on the open market, can go to the central bank and borrow. Not directly from the central bank, but they have what they call participating financial institutions. So you go to your bank, you put in your proposal. If they think it's a good idea, they lend you money, then they ask BOU to refund. But the interest rate is between 10 to 12% under that Agricultural Credit Facility. A lot of people have benefited. All these grain traders who are building their big silos all over the country are using government money. For you may think, oh, these people are rich, they are lucky. They are using government money under the ACF through the Bank of Uganda. Thankfully, people here are IT savvy, so they can go and Google and get more information about the Agricultural Credit Facility. Now, the other model that government has, rather the other intervention is the Youth Livelihoods Fund under the Ministry of Gender. Under that, they are supporting young people who are unemployed to start business in groups. But that is managed by the district community development officers and so on. So it means if you're in Kampala, but you're from Kabale, you either get your money from Kabale or from Kampala if you can prove that you reside in Kampala. But my advice, of course, is in Kampala, the competition is higher than if you're in Kabale. Now, the challenge with this fund is that a lot of young people have come together, they have gotten this money, and they have run out. They have not repaid. Over 200 billion is unpaid under the Youth Livelihood Facility. Ugandan young people have stolen.
Stolen themselves, stolen their own fund.
Or they have stolen from master taxpayers, whatever it is, but this is the position. People form a group, and their intention is just to steal the money. They get the money, each of them disappears. But that program is there. And if you think you can do a good job, then you can follow up with the Ministry of Gender, Labour and Social Development. Still under Ministry of Gender, you have the Uganda Women Entrepreneurship Program, through which government supports women entrepreneurs. Women and women entrepreneurs. Same model like the Youth Livelihood Facility. You have to be in a group, you have to receive training, you have to do this. So if you're a woman, there's that funding under the Ministry of Gender, under UWEP. Now, there is a program called Emyoga, which is under the Uganda Microfinance Support Center. That one is supposed to support artisans in urban areas. Some particular artisans. They are musicians, they are tailors, they are mechanics, they are carpenters, they are these kinds of groups. You can borrow money from, they do it through a circle that is formed. You form a circle and then you apply through the district. Same kind of model, but they offer some training before you can access this money. There have also been some complaints about the Emyoga. Some people feel it's being politicized. Some other people feel it's not very clear, but it's a program that's there and you can apply. You can be lucky. You can't just hear stories on TV, Emyoga is not good, and then you say I won't apply. You're basically selecting yourself. Now, government has also put some money in the Uganda Development Bank, over 400 billion, to support businesses that are involved in agro-processing. Human capital development means health and education. If you have a school, even for daily, since you can go and borrow to build a huge tower from the Uganda Development Bank.
To build a Fidelis Academy. A
Fidelis Tower. They can build a Fidelis Tower of 30 floors.
We are definitely going to follow up on that.
That is available under the Uganda Development Bank. But here, you must borrow not less than 100 million. So if you want 200,000, don't waste your time and don't waste the other people's time by going to line at your DP. If you want, except women, they have created a special program where you can borrow at least 50 million, but still high. So if you want little money, you either go to Emyoga or you go, but don't go to your DP. Then there is also money that is under the parish development model. That is new.
The PDM.
But it's at the parish. It's at the parish. Again, it's at the parish. So since it's at the parish, each parish is being given 100 million. Maybe they're increasing it, I'm not sure. But each beneficiary will get at least 1 million shillings. So it's not very much money. You may be hearing about PDM and you're complaining left, right, and center. You think you'll get 70 million. No. 1 million shillings per 1 million shillings per beneficiary. So that is work in progress. Government has sent money to different districts to ensure that people can benefit from this program. Now, after COVID, government also set up what they call the Small Business Recovery Fund. Now, the Small Business Recovery Fund is to support small businesses who are negatively affected by COVID-19 pandemic. It's the same model like the agricultural credit facility. You can get this money at an interest rate of 10% per annum.
Okay.
You have to borrow this money through the bank. So you go to your bank and you ask them to apply for the Small Business Recovery Fund. You can borrow up to 200 million.
Okay.
Under this initiative. But you borrow once. You can't borrow many times. And then if you're in agriculture and you've already benefited from the agricultural credit facility, you're
then
not
you can't
eligible.
come. So there is a kind of credit reference bureau, a network that sees where you have received money.
They know who has government knows.
Government knows.
Yes, you can't borrow twice. They already know who has
So
borrowed.
if I hear you well in the last 4 minutes,
Yes.
there is no shortage of options
From government.
from government, and other than the lack of capital.
I'm talking about government initiatives.
Yes, government initiatives. There is
So the initiatives are many.
many.
As to whether they are working, that is something we need to interrogate. Some of them are not working as they should be. Some of them are working, but people are not aware.
I think
So
there is an awareness gap.
So because people are not aware, they don't even try. You see? So they complain, there's no this, there's no that, this one doesn't work, no that, without ever trying or putting in effort to see whether you can benefit. So the government programs really are the easy bit, because the rigor with which they assess and give out money. That's why the other people are able to run a 200 billion. Because in a bank, you can't run a 200 billion. They assess you properly. Where do you stay? Where is your house? But so if you think government can even fund ideas like this, youth livelihood funds, people just write a proposal, we want to start a bigger project, whatnot, and they would fund. So government government program, generally speaking, are easy options.
I agree that there's no shortage, and the rigors are less in government, and probably because government has more money available, and
has a duty also.
Has a duty, and I was going to say
Yeah.
a fiduciary duty, but also interest in the economic growth.
Yes.
Then the gap from what you discussed can be bridged with awareness.
Very true. Very true.
Those who are listening to us, this is the Fidelis Leadership Institute. These are FAT talks that happen every Thursday on our X Space and live on Smart 24. Tune in, invite a friend. We are discussing options for financing startups and SMEs, and we have the best brain and knowledgeable presenter today in the studio, Mr. Walugembe John, who is the ED of the Federation of Small and Medium Enterprises in Uganda. Now that we've discussed, you diagnose the issues, why there are challenges, we've talked about the options, we've talked about the demand side and the supply side things. We have identified an awareness gap. We've identified
for government programs especially.
For government programs, and then a mindset, a bias from the would-be beneficiaries. Quickly, in the next segment, we would like to discuss, other than the why people are not quick to do this, the few that have gone have had their fingers burnt. What would be the red flags? Let's discuss red flags for options, because we've had good intentioned people, but because of the middlemen, especially for the government programs, where is the gap or the lacuna where ill-intentioned people take advantage? Because we know people who have said, someone came to me and gave me this assurance, and I put my land on sale, and they said they're going to give me this kind of money to start up a business, or that government was offering this amount of money, and then so we are looking at the red flags. For someone who has listened to us today, a leader out there, a startup, an SME owner who wants to take advantage, where can they be educated to know that this is a mufere, especially when it comes to government programs?
Okay, firstly, before I address that, I want to say that there are other private sector options.
Okay.
SMEs need to look out for, apart from government. Obviously, people can look at borrowing from banks, or they can borrow from microfinance institutions, or they can go to circles. So all these are options that Ugandans are using. There is also now the issue of private equity. Private equity, unlike debt, debt is where I lend you money and I expect you to pay me back with interest. Equity means you give me a stake. You give up partial ownership. So you say, I'll give you 10 or 20% of my business because of the money that you've injected or the skill. We also have the whole idea around crowdfunding. It's starting to pick up. Those that are IT savvy, you put your things out there and people collect money, 20,000. We've been crowdfunding here for weddings, for funerals, but we want to see more crowdfunding for businesses. You come and put out an idea, and your family raises the money. But
That's
people are willing to raise 50 million for food for one day.
Then 50 million.
Yes, instead of raising 50 million as a family to start a farm. You see that there's also now that problem. We think that for business, other people should bring their money. So we are not willing to put a stake in something that can, potentially grow. So those are the other private sector options. We also have the stock exchange, where you can also float, your company, float your shares, sell some.
But that wouldn't apply to startups.
The challenge with the stock exchange here is that it's mainly tended to rotate around a few big companies.
That's what I was about.
They need to create. I know I was at an event last week and they told me they're creating an alternative exchange. Normally, in developed countries like London, you have the big one for the big companies. Then you have an alternative exchange for SMEs that have less requirements, and it's basically easier for companies to list. That has not been actualized, not just here, but in the whole of Africa. So hopefully that's something that can grow at some point. And then we have the options around Islamic banking. Government has approved the Islamic banking law, so that's an option. Then we also have green financing options like carbon credits and these kinds of things are also starting to pick up now. I saw the Ministry of Water saying, carbon credit projects, you should come and seek clearance here. So a lot of people who have land and have planted trees and stuff are earning money through this kind of carbon credit scheme.
Thank you.
So these are the broad range of options that SMEs and startups can look at as they look.
Thank you very much for that additional list.
Yes.
So quickly, back to the issue of unscrupulous dealings, people who come middlemen, agencies, brokers, leading us to these programs that are...
Before I even tackle that, I want to mention something around pyramid schemes and Ponzi schemes. Because from a lot of startups and SMEs, they seem to fall prey to these. A lot of Ugandans want to earn money fast. So you have a business, you probably have accumulated 20 million, and then someone says, no, if you invest at 20 million, you will grow it into 40 million in 1 month. So someone says, why do I struggle with my business? Why don't I pick the 20 that I've made, put it there, it grows, and every week I'll be picking 10 million. So a lot of Ugandan startups and SMEs have fallen prey to this, and we must warn them that everything that appears too good to be true is probably that. You see, so if it doesn't make, if you don't understand a business proposition, if you don't understand an investment option, if you don't understand a financing option, someone is saying, through Bitcoin, we are going to invest 100 million in you. How? If you don't understand it, tell him to go to hell. Because you do things that you can understand and make sense to you. So I need to warn people about that. Then now, two is the fact that for government programs, unfortunately, because government is made up of politicians, you always find politicians lacking in the corner claiming, I brought for you this program, it's mine.
There are entrepreneurs who are actually earning from brokerage. There's a segment.
Those are not entrepreneurs, they are just
scammers.
So these scammers sometimes are politicians, sometimes are near politicians. So taking credit and trying to say, if you give me this money, I'll help fast track so unfortunately for government programs, it's hard to eliminate those because government itself is made up of politicians, and these politicians on government programs will always be there. See, so if you're going to benefit from a government program, avoid paying a lot of money before you get the actual thing. First pay 100,000, first pay 200,000, first pay. At the end, you find that PDM is going to give you 1 million, but you have paid 2 million to access 1 million. It doesn't make sense. Most if you've spent also time. So you must measure your tolerance to these kinds of things. If you think you're not tolerant, then you let it benefit other people.
Okay.
But there are some programs that are quite straightforward, particularly those that go through the banks. If you're talking about SCF or Small Business Recovery Fund. Of course, they have also had issues. Even the banks sometimes tell SMEs, we don't know about this money, we have never heard about it. Do you know why? Because they are supposed to lend at 10% interest, but they have their loans at 24%.
Oh, they are conflicted in a way.
They are conflicted. So sometimes they also try to discourage. No, this small business thing will take long. Why don't you take this one? I'll give it to you tomorrow. Then the SME says, instead of waiting for 6 months for the government money, let me sign and pick this.
Okay.
So there's also that. But overall, I would say that if you start up, and if you need small money, not a lot, then you go for government programs. There are also government programs for those that are very established and need long-term financing. And I've talked about the money at UTB. I've talked about the agricultural credit facility. Those have tended to fund fairly big projects and businesses.
So we appreciate that information. It's really the tip of the cracks. So we as leaders, as business people, we need to go find the right information from the right fora and make decisions that will benefit us. But there's no lack of options. As has been propagated, there are many options out there, both on the government side, in the private sector, but also as business people, we have to be ready, because these come with terms and conditions. Thank you so much, John. Those who are watching us, these are FAT Talks by the Fidelis Leadership Institute. I just want to remind you that our next cohort will be in February, and this is the best time to reach out to us on our socials, on our website, so that we can partner with you and handhold you through the journey of your business development by offering trainings and mentorships and coaching for you and for your team, so that you can have a lifelong partner to help you navigate the nuances of development in whichever sector you might be. Please check out our socials, check out our experts, check out our website, so that you can be guided on how we can partner with you in the coming cohort. We have a fellowship that trains individual leaders at all levels. Then we come to you to get bespoke solutions, and that is what we are here to do. As we wind up this segment on finance options for SMEs, when we have an ED at the helm of small and medium enterprises, we cannot miss this opportunity to ask, what can the Federation do? What does it do? How can we use the Federation to bridge these gaps that we have identified during this FAT talk?
Okay, so the Federation of SMEs is an umbrella body that represents small businesses. We believe that for any economy to grow, small businesses in that country must thrive. There is no country in the world, and I can challenge anyone to come and tell me any country that has grown on the basis of either investors or large businesses only. Every country in the world places a lot of emphasis on these small businesses. You remember during COVID, the US president started announcing packages for small businesses. Why? He did that because he appreciates and he knows the role, very important role that they play in that economy. If you look at the Chinese economy, if you look at the Indian economy, if you look at, whichever economy you can talk about, SMEs have been integral to the growth of those economies. Therefore, if Uganda is to grow, if we are to create decent jobs for our young people, if we are to stop exporting our young graduates to go and do domestic work, we must ensure that we build a base of strong, small and medium-sized businesses. And as a federation, that's our priority. So we do that through policy advocacy. We want to ensure that the business environment is conducive. When you start your businesses, you don't have all these laws that are, hindering you. Today it's this agency that's closing your business. Tomorrow it's that agency. This as URL removes this padlock, UNBS puts its padlock, as that one puts, then KCC also appear. So we want to have a smooth business environment. We want to tell government, let people pay tax once, and then you distribute your money. Because UNBS, you are government agencies. You sit there and distribute. Come to me and say, for you pay 200,000. Then you subdivide in your corner and you allow me to continue with my business. So that's our major role in terms of policy advocacy.
Very well said.
We also have work that we do around building capacity of SMEs to run their businesses better. So we do a lot of that through the different programs that we run. We run many programs with different partners. We are working with the Netherlands Embassy. We are working with a lot of other organizations to support the growth of SMEs. And the Federation has members across the country, over 734,000.
That's already networks and customers and
Very
knowledge.
true, very true. So please, if you're there, a small business owner, please consider joining the Federation. You can go to our website, www.fsmeuganda.org. Please join the Federation. It's for free. We don't charge. Because you know the economy is tough. We are the ones who have been advocating for you, so we can't put an extra burden by asking you to pay us money. So please join, and let's see how we can support you too.
Thank you so much. I don't see another way to conclude this conversation except by inviting our listeners and viewers to take advantage of them. First, the information we've shared has barely scratched the surface about finance options for startups and SMEs. John has spoken briefly, but there's more information on the websites, on the different platforms where these organizations are implementing the finance options. If you want someone to work with you and help you compare and evaluate and assess which options are best for your organization, the Fidelis Leadership Institute is here exactly for that. If you want someone and you're already on your journey to just handhold you, maybe keep you accountable, on track with your goals as a business, the Institute is here, and we have many other partners besides the Federation. As you keep listening to our FAT talks and come to our spaces, both virtual and real, we will take you through and make sure that we grow together and have a critical mass of leaders that are faithful, available, and teachable in all spheres. From the FLI team, and thank you so much, John, and Smart24, thank you so much for listening in and tuning in to our experts. We hope to see you next Thursday for yet another FAT talk where we have conversations that matter. Good evening and have a great week ahead.